This week, we are bringing you something a little different. Your usual host, Dave Russell, is on holiday and he has left me, Jan Skoyles, in the hot seat of GoldCore TV. Well, I'm certainly not one to miss out on an opportunity to nosy around. So I've taken this time to delve into our archives where there is a wealth of unseen footage. All of it from past interviews and much of it of questions and answers that I just know we would all love to hear. And it got me thinking, if I could have a dinner party with some of the great minds of the gold and silver world, who would I invite and what would I ask them? So maybe I would ask Jim Rickards what his favourite books are, or David Morgan what his first job was, or maybe Marc Faber what his biggest investment mistake was. Please sit back and enjoy as I bring you my imaginary dinner party with Jim Rickards, David Morgan and Marc Faber, courtesy of some pre-recorded and as yet unseen footage. Enjoy. Well, thank you everyone for joining me. I was thinking maybe we could just go around the table and introduce ourselves and say what we do, just in case none of us have met one another before. Jim, why don't you go first?
James Rickards, I'm a farmer and a writer.
Marc Faber, economist and financial advisor and editor of the Gloom, Boom and Doom report.
David Morgan, founder of the Morgan Report.
What I would really love to know is what each of you did after you left school. Marc, what did you do?
I went to work for an American investment bank in 1970 in America called White Weld. It was then merged partly into Merrill Lynch and partly into Credit Suisse.
Did anyone do anything that wasn't quite so similar to what they're doing now? Dave?
My first job out of high school was driving a fuel truck at the local airport. After university, my first job was as a crew member on the B-1 bomber.
Nice.
Joint Test Force on the experimental version of the B-1 before it went into production.
So let's talk about books. If someone was new to this space, which book or books would you recommend? Marc, what would you recommend?
Well, I think a good book, and this is something even someone who is not an economist can read, is Milton Friedman's Capitalism and Freedom. Okay?
Thank you. Oh, Marc, something to add?
The other great book, but it's a little bit more difficult to understand, but some chapters, the conclusions and so forth are very good, is Capitalism, Socialism and Democracy by Schumpeter.
Okay, but they're all great recommendations. Has anybody got anything that's maybe a little bit less economic-y that you could recommend to people? Jim?
Well, probably have three. I would read the Bible cover to cover. It's great perspective. Obviously a lot of religious, mystical content, but that aside, the human condition hasn't changed much, so it's a good source. I also would read Narrative Economics by Robert Schiller, and there's another book by Lord John Julius Norwich called The History of Venice, and everyone's like, why would you read The History of Venice? Well, first of all, they lasted 1,100 years as a republic, so that's a pretty good run. But they were in, I lost count, but probably 100 wars in 1,100 years. And you're like, well, why were they fighting all the time? Well, they weren't really a martial state. They were a commercial state. They were all about business. Just read The Merchant of Venice by Shakespeare. But those wars were how you settle differences and gain trading outposts, trading advantages. So it's an interesting context. People just think of war as, Napoleon or Hitler or conquest. But Venice fought many, many wars, but it was always for the commercial interest. So it's a way to kind of put the current world in context.
Let's talk markets for a second. Do you have a perfect market indicator that you perhaps look to, maybe when you turn on your computer in the morning, or you just constantly, that's like your reference point that you check out? Is there one that you would suggest people look at?
There's no market indicator that is more valuable than another, because they all vary. Sometimes this market indicator is the most important one, and at other times that indicator is the most important one. But in general, I would say we have markets that move up and down, whether it's commodities or stocks or whatever it is. And we have trend lines. And so sometimes stocks go way above the trend line. And there is euphoria and greed and overvaluation. And then it's not a very good time to invest in that particular sector. And then we have markets which become neglected because everything looks bad. But when everything looks bad, nobody wants to buy. But because nobody wants to buy, they're very cheap. And that's the time when you should be buying. Now, what is cheap can stay cheap for another 5 years. But the downside risk diminishes. What is expensive and popular and always in the limelight, what is all discussed every day on CNBC, you don't want to own that. Yes, this is a fact.
That's a balanced answer, Mark. But, oh, David, have you got anything else to add?
This one I kind of stumped at. I mean, I did show I have some sense of humor. I said Alan Greenspan's briefcase, and that would only probably appeal to people that are around my age, because it's been a long time since Alan Greenspan was head of the Fed. But it used to be a joke on how thick his briefcase was, whether interest rates were going to move up or down. I would say there aren't any reliable indicators other than the gold market and perhaps the silver market to a lesser degree. Things are so distorted and things can be changed. Even the way the CPI is calculated has been changed drastically from the time it was calculated in 1980. So, I mean, I'm sure there's a lot of people out there that would say it's this, it's that, or I made my own indicator, or it's the Buffett indicator. And there are a lot of them that are useful, but what's reliable? The barometer of gold is probably the most reliable in the long term. If the gold market breaks free, and I believe it is, it will signal the end of this great fiat fiasco.
Okay, let's get maybe a little bit more philosophical. What is the best piece of advice you've ever received? David?
To live the golden rule, but to live it, not to just talk it, to walk the walk, to, being tested by, my parents as far as, how would you treat, someone on the street, or, that type of thing. And, character, I think, is the number one thing. I mean, it goes with the golden rule that, if you have strong character, you're going to be the same always and everywhere. You're not going to vary and be two-faced. You're very humble and very giving and generous amongst your peer group when everybody's watching you. But when you're actually on the street and someone truly needs a helping hand, are you going to give them the hand or not? So that's it.
Live the golden rule. I like it. That's really good. Anybody else?
People always say, I have a soul. And C.S. Lewis said, no, you are a soul. You have a body, but you are a soul. And so when you kind of reverse that, it really helps you to understand what's important in life.
I really like that. You are a soul. So what's the biggest lie that people believe?
The biggest lie that people believe is that printing money will solve an economic problem.
I could not agree more, David. It is scary how many people think that money literally grows on trees, or stuff that's just created out of thin air has value. Let's daydream for a minute. Imagine you were made head of the Fed. What would your first move be?
I would give a speech to everyone on the planet and explain how central banking, basically the Fed, is the root cause of much of humanity's problems.
I would buy gold. I would use the combination. I had to work with the Treasury a little bit, but I would use the combination of the gold in Fort Knox, and a lot of us at West Point, and the Fed's printing press to make a two-way market. So just set a price for gold significantly above where it is now, at least $5,000 an ounce, but probably higher. And just say, hey, if you think that's high, sell it to us. We'll pay you with dollars that we print. And if you think it's low, come and get it, back up the truck. In other words, but if you do that, if you have the gold stash and the printing press, and you get the price right, you can make a two-way market and maintain the price. And that would be a way to restore confidence in the US dollar.
So I said, to close it down.
What has been your biggest financial mistake or investing regret?
When I was in New York in 1970, I was offered a Roscoe painting for 30,000 US dollar. So it's actually not a financial investment, it was a painting. And I was offered an apartment on Madison and around 60th Street. I forgot this, was it 64th or 63rd? Large apartment with like 5 bedrooms for 50,000 US.
Wow.
But the maintenance fee was very high, it was 2,500 a month. So I said to myself, you know, with my salary, to pay every month 2,500, and the rental, you know, do I get the income or not, and so forth and so on. So I didn't buy it, but it would have been a great opportunity.
Saying no to a Rothko, that's got to hurt, Mark.
Buying too many junior or penny mining shares when I began investing in the sector.
Okay, we are going to say goodbye, I promise. But first of all, does anybody have any lessons about managing money that perhaps they would like to share?
I had a front row seat on the meltdown of long-term capital management in 1998. I was the principal negotiator of the bailout. I dealt with I call them the 14 families, but they were the 14 biggest banks in the world, kind of gathered at the table by the Federal Reserve didn't bail anybody out, but they were a catalyst for the bailout. I was the general counsel, I was the lawyer. And we got through that. And it's funny, a lot of the LTCM partners went on to make $1 billion in other businesses. So the fact that everyone got out, there were no enforcement actions, no lawsuits, no liabilities, just what happened. But the fact that people got out of it without a scratch and went on to a lot of success, actually, in other fields. I was happy about that because that was my job at the time, which was it's kind of hard to lose $4 billion in 6 weeks and not get sued, but we managed to do that. So we got through it. So I thought I did a good job as a lawyer, but then I said to myself, wait a second, these guys really did have 165 IQs. They really were smart. They really were Harvard professors and MIT professors. 2 of them really did win the Nobel Prize. None of that was puffing. It was all true. And so if the smartest people in the world can fail that badly, what were they missing?
It's all about risk and letting your winners run and weeding out the losers. It's much better to add to a winner than it is to average down on a loser.
Okay, gents, this has been fun, but I'm afraid we are going to have to wrap it up. I've got a lot of clearing up to do and carriages await. Thank you so much for joining me at my imaginary dinner party. I hope you can all join me again very soon. If you enjoyed this and would like to see more, then please hit the like button or tweet it or share it. And if you haven't already, then why not subscribe to GoldCore TV? This is just one of many shows that we bring you with great minds and insightful commentary. Thank you for joining us. I better go and clear up. Bye-bye.